Traders, I'd like to welcome you to the webinar event. I am your host, Sean Kozak, and I'm going to be doing an event here on behalf of ARC AI. Essentially, this has been a webinar that I've been excited about for some time now. I know the dev teams, the programmers that we work with, and Jim and a bunch of the traders. I know Roy and I have been talking a lot about this. Essentially, a lot of traders have been asking for trend trading solutions, and the truth is there's not a lot of good ones out there. A lot of people use moving averages or wave theory and a lot of different concepts with regards to trend trading. But to my experience over the last decade that I've been involved in the markets, I haven't really seen anybody with any substantial merit when it comes to trend trading effectively. And so the team and I, we put our heads together for the longest time, and we've been really working a lot on volume analysis for trend analysis. And I really think that this is gonna change perspective for a lot of traders. I truly believe that this is going to be an event to remember when it comes to volume profiling as well as trend trading. Now, we're going to talk about what the anchored volume software was designed to do. And I honestly don't think anybody's ever going to look at market or volume profile essentially the same way after we expose you to this. It's I was a volume trader for a very, very long time. Many of you guys know years and years ago when I ran the profiling rooms before Heck Gilbert came on. And when I say this is a sophisticated, simplistic, and effective volume solution, I truly mean it. So with that being said, we're going to kick things off. Couple groundkeeping rules. We are recording the event. We will distribute it at the end of the webinar. If you can't make it to the end, no problem. We understand. Just make sure that you check your email for all the details. If you have any questions, put them in the chat box. No offense to you, but I won't be reading them until after the event is over. So if I don't get to your question, or if you don't hear me respond, it's not as an insult to you. It's just I'm presenting material, and it's not my focus to watch a chat box while I'm teaching, right? So Jim's here to help, and we'll definitely do Q&A at the end of the event. Yeah, at the end, we'll go over details. We've got a special poll here. We'll be giving away a free license today for everybody that stays to the end. You'll have access to that. And then we'll make sure everybody gets opportunities to get in at the launch pricing before this changes. So that being said, let's kick things off. Need a quick disclaimer. As you know, I'm not here to give you advice, not your broker, your CTA, or anything in between. I'm not here to promise you the hills or give you some holy grail. I'm here to educate on products and services. And if you do want to be here for this event, please accept the risks in the business, and past performance cannot guarantee future results. Before I go any further, can you do me a favor and please type a Y in the chat box so that I know that you guys all accept the risk in this business and we can carry on like professionals. Excellent. Perfect. So we've got a couple things I want to talk about here. And, I've said this in a few other presentations, and we're going to rehash this here because I think it's really important. This event is for a few people. Okay. So if you're struggling, if you don't have a trade set up for trend trading or volume analysis, and you're looking for one, this is definitely going to be right up your alley. If you're looking for something that can provide you with an opportunity for better performance, I'm not sure where you're at with your current trading, but I can assure you this, that once you know what we're going to teach here today, can add to your toolbox. Maybe you're not happy with the strategy you're trading. Maybe you are. This can definitely add to that method. I'm going to be teaching ways not to get stopped out. So if you're getting stopped out a lot, you're going to want to pay attention when I do the demo, because there's ways in which you can prevent it drastically. And if you do it incorrectly, you're going to get stopped out because you're in the wrong place to take the trade. If you follow what I'm going to teach you today, then I can assure you, you will ultimately have an opportunity that is probably not ever been taught to you properly before. If you don't have any experience or a track record, I can assure you this, you're in the right place. I wish when I first started, I had a NeuroStreet or an ARC around to teach me what I had, right? I truly mean that. I wish I had what's available now when I first got started. So no experience is not a precursor for being here. When you want to use your capital and your time, a lot of people end up wasting a lot of time and they lose all their money. And a lot of people need a better use of both, or they don't even have a trading plan. If you don't have a trading plan, then this is where you start with one. This is going to be an event where you can start putting one together. And the last one I think is the most important. Trend trading is not easy. Like everybody wants to just trade the trends, but what are you doing when the market's not trending? Or what are you doing when you're in the small trend versus the big trend? And where do you start your trend and where does it end? And all that stuff, right? What I've designed here from a strategy perspective, I think is the best thing I've seen in terms of trend trading. And it's a pretty bold statement, right? I mean, I'm not here to be any better than anyone else, but when you guys can let me know after the demo if you think that that's on par. Okay, so if you feel you belong here on this list, then stick around. But we're here to kick out a few people, and we will kick you out if you tell us that you're on this slide. All jokes aside, we can't help people that are not helpable. And if you got your guard up, if you think you know it all, if you don't have money, if you don't have the ability to participate with funded accounts or for prop firm funding or anything of the nature, then you probably don't belong here. If you're negative or you're not willing to put in the time to learn it, if you're looking for something to get rich quick, right? If you just expect things to happen for you without putting in a little bit of time and effort, then it's probably not a good place to be. Okay. If you're not ready to take ownership for your own decision making, nobody else is putting the finger to the mouse on your end of the screen. Okay. So the truth is that there has to be a level of acceptance. If you're struggling, we can help you, but you got to be willing to admit it first. And we're not here to give you a holy grail that doesn't exist, but the truth is that good systems do exist. And if you can combine a good trader with it, you can be in a really good place. Also, there's no time for the blame game, right? You can't blame me or Jim or Roy or Bobby or, Barbara or Jose or Carrie or Nick in the event here. Like everybody's an independent trader, right? So we have to take everything with a grain of salt. Put in the time, do the work, and the magic will happen. So if you feel you're on this slide, I can't help you. It's a reality. So can everybody just give me a yes if you feel you belong in this event? I really mean that. I don't like working with people that I don't want to be around. It's been in this business too long. I don't really want to be around people that can't be helped. I'm not trying to be arrogant. I just think that we all understand that, right? So let's kick things off then. Consistent winning streaks is essentially what everybody wants, and little to no drawdowns. Okay, like that's a perfect world, right? It truly is a perfect scenario. We all want consistent winning streaks with little to no drawdowns. Well, in order to do that, you need to have a really kick-ass strategy. Like you need to have a kick-ass strategy, and you need to be a pretty good trader. You have to have two. Okay, you can't just be a great trader and then compare it to a really shitty system. It's just not going to work for you. Or you can't have a really good strategy and put it in the hands of a completely inexperienced trader that doesn't know anything, doesn't even know what the charting platform's doing yet, right? There has to be a level of development that we come together as we progress on this journey of profitability. Okay, and can you guys all see the screen? George is saying he can't see anything. Everybody got a good visual? Maybe George sign out and sign back in. See it. Okay. So what I'm here to do today is I'm here to teach you a concept that I have not seen done anywhere properly. And I mean it anywhere. I mean, I know the space very well. I know every vendor in the space from top to bottom in our industry. And I know everybody that's doing volume, and I know all the software that's built around volume. I just haven't seen it done properly when it comes to trend trading, intraday scalping, and in big macro trends. And I want to talk to you today about how this is going to work. So I'm going to teach it to you. And I'm going to truly tell you that I wish somebody taught this to me a long time ago, because it's an asset. It's not a liability. I can promise you that. So what I want to do over the next 60 minutes, if I can keep it under 60 minutes, we'll be laughing, eh, Bobby? Anchored volume. It's a tool that was built for the premise of manual profiling. Unlike all the other types of profiling tools out there, It's going to change the way you look at volume. I guarantee it. I cannot guarantee anything else in this industry. I can guarantee you that you're not going to look at volume the same after I teach it to you like this. And you're going to get rid of all the other volume stuff that's going on. I can promise you that. I don't see the need for it if you're an intraday trader. That doesn't mean there's no need for the macro profiles or big composites or anything else that's on the platforms. That's a different way of trading. I'm really gearing this to the active intraday trader. And the goal is to create a system, a product, and a process that can give you something that you can use in combination with everything else. How many of you guys are looking at reversal setups right now in your business? Everybody in here is by some nature trading some form of a reversal, right? Whether that's an order block, whether that's a supplier demand zone, whether that's a volume profile level, whether that's a support or resistance level. I mean, it's all some form of reversal. Can we agree with that? But the thing about reversal trading is that it's not the only way to trade the market. And so what happens is that if you're just a reversal trader, you're not going to be able to participate in trending markets. And if you're just a trend trader, you're not going to be able to participate in reversal markets, right? So there has to be an understanding that there's a need for both if you truly want to be able to participate and actually actively trade a dynamic market, right? So I'm going to give you step-by-step examples. I'm going to teach you how to do this in the demo. And we're going to do a top-down analysis. I'm going to look at composite profiles, and then we're going to spend time on manual profiling, which is the primary focus of the event. And then at the end of this webinar, I can assure you that you're going to want to come to the event tomorrow. Anybody who decides to do this with us and join the anchored volume revolution, will you? That I'm going to be hosting a private class tomorrow, a deep dive AMA for only volume traders that are going to want to learn this. And I'm going to be teaching my instructors. I'm going to be teaching the experienced traders as well. I'm going to be teaching all the newbies. And you're going to be able to walk away with some pretty serious trades. And you'll see today what I mean by that. Okay. So here's an example. Might look a little bit distorted. I didn't see that, but that's fine. Here's an example of a strategy setup that I think everybody's familiar with. How many of you guys have heard about the low volume node trade? Everybody's heard it? Anybody here heard of low volume analysis? It's not new. It's not a negative thing. In fact, it's a very, very profitable and powerful trade setup. In fact, we have a trade room educator and trade room designed to teaching low volume analysis. Okay, so when we hear the LVN setup, it's called the Gilbert Special, right? The Bobby Flay of Gilbert's life, right? No, all jokes aside, though, this is a setup that whenever you have an opportunity, what we have here is we have a distribution. If you're new to volume profile, stick around, you need to learn it. We've got the volume levels here like this, right? The distribution. And normally what this means is that the bigger guys are building a position up here, right? In these accumulation phases or distribution phases. And then eventually what that means they're building a position. Yeah, they're building a position. And eventually when that position is finished building, you can see here it goes up, down, creates a range. When that range is done, there has to be an outcome. It's either going to go this way or that way, right? The breakout takes place, which creates the markup or the distribution, if you understand Wyckoff theory. And then what happens is through that process, the liquidity dries up. You can see there's no volume here. Well, the market cannot facilitate trade in a low volume location. So a lot of traders will come up and they will take that low volume retest. It's a very profitable way to trade volume, but it's a reversal, okay? It's a reversal trade. It's a great reversal trade. And the software here today, we're going to show you does this, and you'll be able to identify LVN setups in a very manual, active way, okay? Here's another example. High volume nodes, okay? How many of you guys have heard of the point of control before? Here's a great example of a large rotation, right? A large rotation in the market, you get a trade, it trades up, it trades down, it creates major swing points in the market. We take an anchor from the major swing down to the major higher low. As soon as we break with a higher high, what that tells us is that we have a rotation. And inside that rotation was normally going to be what we call a distribution, right? And a lot of people will see this on a smaller trend, like we do this on the 10-minute volume charts in the trading room, right? You get these trends like this. This is what we call a rotation. And inside there's a point of control, right? Very, very, very good trades. I know that myself, Roy, Bobby, we've all taught that in the prop program. It just depends on the size of the rotation. And then we come back for a retest to a high volume node and bingo bango, right? You get a really good reaction if the volume supports the trade, right? Now this could be a form of a reversal and a trend trade. And it's not new methodology. Like it's most people that learn volume profile, when you have an auction, right? You've got like the profile will be like this, like this, like this, like this, like this, right? Most people that learn distribution theory or auction theory are going to learn the high volume nodes and then the low volume nodes, right? And depending on if you're a high volume trader or a low volume trader, you're going to still look at the auction. You're still going to be able to see the profile and the distribution, and they're very, very good trading strategies. In fact, that's how you trade volume profile. Like that's just the way that it's used, right? Now, how many of you guys are using, to some extent, low volume nodes, okay, and high volume nodes for your analysis? Low volume analysis and high volume analysis. Maybe not this example, maybe not the way I drew it or the way that this slide shows it, but to some degree, you're using volume studies in your trading arsenal, your toolbox, right? Yes, Graham. Yes, the break of structures do react to the LVNs, right? Okay, so this is good. So everybody, the majority of you have, and if you haven't, perfect example of why you need to be here. Now, if you're like me when I first started studying volume, or if you're like me when I first started trading, I can only tell you my own experience. It was not an easy process, right? Like I remember opening up my first trading account and, we all have these problems. Like, I can remember the first time I lost really big on a real live account, like really big, like it made you sick to your stomach. Right. And after that, it's like I'll never forget the big trade I lost. It wasn't even money. It was like when I first started years, I was just coming out of college. My family gave me an account to trade my dad's money and I lost it all. Right. It was crazy. Right. I didn't need to go into too much detail there, but I know what it's like. This is when I was just a young lad. Right. And, ever since then, you always start to question your trades. We have a really big loss. It shakes you a little bit. Roy's saying, me too. Anybody else lost big in their own account before? What about anybody here feel like you can't draw your analysis correctly? Like some days it's spot on. And then the next day you try to do it the same. And it's like, well, I don't understand why it's not always the way it was, right? Why? Because the markets are imperfect, right? It's the one thing about the market the only thing you can guarantee about the financial markets is that they'll never be the exact same every single day. That is the only guarantee that exists, right? So how do you do this, right? How do you identify trade locations, zones, trend opportunities, the locations to trade in, right? Like taking trades in the wrong location normally ends up happening because you're either trading against the analysis that day, or maybe you're battered by your emotions, or you're struggling to get out of whatever it is that's holding you back. You're not special if you struggle here. You're just like everybody else. So give yourself a break, because that's the reason why we all get together and we help each other win. Okay. Now, I've been where you are. Bobby's been where you are. Roy's been where you are. Gilbert's been where you are. Jim's been where you are. Heck, everybody in our network's been where you've been. Okay. So what I want to do today is I want to provide you with a solution which I feel can truly help shift the paradigms from that scenario. Okay. Because if you stay here, it's going to be a really hard business. I don't believe I'm there anymore. I know Roy and Bobby and Jim, you guys can all attest to this. Like, you have your hard days once in a while, right? You have your hard days, but the goal is to take you out of that. And truthfully, everybody has a lot of shiny objects out there, right? There's a lot of tools to trade with, but I don't believe anybody's done volume like this before. And so when I share with you why you're never going to want to trade volume profiles differently, you'll understand why. Okay. So If you can relate with anything that I said, you know, that's great. But the truth is that the real problem isn't just the markets. Like, I know that there's this discussion that always has to be about taking ownership, right? We have to be responsible for our own trades, and we have to take ownership for our trading plan. But there has to be some onus put on the tools and the actual strategy, right? Like, because it's not always us. And that's a really good breath of fresh air, right? Like, how many of you guys can agree that if I could tell you that it's not always you, that it has a lot to do with the strategy that you may be trading, then we can lift that burden off your shoulders a little bit and start giving you something that can actually make a lot better sense to you. Okay. How many of you guys are in a place right now where you're looking for something better? Can you just give me a yes? Like, you know, like you probably have some great stuff, but you're always looking for something maybe a little bit better, or something that can be a little bit more effective. Okay. Because if you're not, then there's no need to be here. Okay. So I can tell you right now that that's what I'm going to do here. I'm going to help take a little bit of the burden off your shoulders. You still need to take some ownership for your own decisions, but I'm going to teach you a system which I think you're going to be using as a primary. Okay. So here's what I want to do when it comes to auction theory. And, you know, everybody's heard of the VWAP before. Okay. How many of you guys have heard of the VWAP? The volume weighted average price. Okay. Good, because it's nothing special. Like, I get it, there's a VWAP, and, you know, it's the volume weighted average price, and it's the benchmark for the institution. So what? Because it really doesn't matter about the VWAP. Where it matters is where it's starting from. What matters is the actual anchors that drive the trends that the volume is respecting. So if you have a profile and you have a platform that's plotting a VWAP, or if you have a VWAP on your charts, well, it's actually rendered useless if you don't understand how to apply it. And, you know, here's an example of some composites. You know, these are daily composites. Well, if you're using a daily profile, which means the profile for the day, and you plot the VWAP for the day, you're going to get a few trades once in a while hit, and they're going to hold, right? Like, it's inevitable. You're going to get a couple winning setups off the VWAP. It's bound to happen from time to time. But the problem is that everybody can see it. And yes, there's some, you know, there's some discussions around it being a self-fulfilling prophecy, and, you know, but if everybody can see it, then everybody understands it's there. And you know what? It's only going to work until it doesn't. It's like a 20-period average. To be honest, using just a rudimentary VWAP is no different than a 20-period average. Yes, it's volume weighted, and it can be a very effective edge when done correctly. But if everybody can see it, then you're really not hiding an opportunity. You're really not doing anything different than the next guy. And I argue the fact that you need to be doing stuff a little bit differently if you're going to truly take away profits from the market. Now, I'm not here to say that the VWAP is not important. I'm here to tell you that it may not be the best edge when looking to trade trends. Same thing with moving averages or Bollinger Bands or whatever else you want to put on your chart that tells you the direction of the 20-period, whatever, right? So the VWAP we're going to talk about, and we're going to talk about why it's really not a really good approach to trading. And that's a pretty bold statement. But I'm going to show you, that you miss out on a whole lot of opportunity if you're just trading the standard VWAP. Now, this example here, there's some great trades. You can see there's some shorts and some longs. And, you know, it's, you know, in these situations, it looked pretty good. But there's a better way. Okay. So what I'm going to show you is how to use auto updating profile analysis. We're going to talk about the difference between static profiling for backtesting, and I'm going to talk to you about real-time profiling for hard right edge trading. And we're going to do a demo, and we're going to go over composites and manual profiling. This is something that I will be teaching you a lot of. This is something that is really going to be taught. I'll be spending a lot of time on it with Roy in the trading room, and ultimately in the AMA that we're going to be doing tomorrow. Now, this is what we call a CWAP. Now, if you don't know what a CWAP is, it's a pretty important term. It's called the cluster weighted average price. The VWAP is the volume weighted average price. Okay. Now, the VWAP is this blue line here, and the CWAP is always going to lead the VWAP because it's a tick driven volume weighted average price. And what we're doing is we're looking inside the volume from every single candle to basically provide a CWAP level that most people don't even know is there. And the difference between it is really where you choose to put your anchor. And this is the secret. This is the edge to how you trade this. And this is going to be everything that I focus on the demo. But I just want to make sure that everybody understands what the CWAP is. Imagine every single candle, there's a cluster, right? You've got a big candle, there's a cluster of volume. You've got a really big bar, there's a volume cluster. And inside those volume clusters, there's a point of control. But the point of control is only one tick. The cluster is several. It's the bulk of volume. So what we do is we take the bulk of volume from every single bar and we create a CWAP and we turn the VWAP off because it's really not a good use of volume. It's really not. Now, the VWAP can be used on minute feeds. So if you're somebody looking at large amounts of data, you're probably not going to use the CWAP because the CWAP is a tick-driven tool set. So there's a time and a place to use the VWAP, and there's a time and a place to use the CWAP, and we're going to spend all that time. But this is the money trade, and we're going to talk about it today, and we're going to go over the examples, okay? Here's some examples of some CWAP trades. Now you're going to take a look at these anchor points, okay? I'm going to teach you a little bit. What you're seeing here, there's a whole lot going on. I'm going to break it down, okay? We're going to talk about the CWAP trend trades. Now, if you take a look, this says static manual profile. Over here, you're going to see dynamic real-time profile. The difference is you use the static on all historical levels. You use the dynamic real-time profile for the hard right edge trading. So we've built a tool set that allows you to go back and historically backtest volume analysis, but then ultimately apply it when it's useful so that we can immediately turn the anchor on for real-time trading, which means you don't need to be moving your profiles when it's real-time. It'll automatically update on the fly. So everything will change. The CWAP will update, the profile will move, everything will happen for you. So the difference is like it's when it's time to trade, it's time to trade. You kick on the real time and this will all automatically populate. Now you do need to be able to use static profiles because you want to go back and actually see where the trends were and what they are and what you need to do. But if you take a look here, if you take a look at where the anchor point is here. And then this anchor point is here. And then if you take a look at this trend is here, if you notice this cluster, this volume cluster is in a way different spot than the anchor, right? If you take a look at like this one's going to here, and then this one starts from up here. And this one goes here, and then this one starts down here. You say, well, why? Well, there has to be a reason for what we do, and I'm going to teach you the strategy around that, okay? The other thing I want to mention is the bands. So has anybody ever heard of the term called standard deviation? Give me a yes if you know what standard deviation means, okay? It's a term used in statistics to measure the bell curve, okay? And it's used in volume profile, it's used in market profile, right? This is what we call the mean. And then you got 1, 2, 3 standard deviations on each side. It's a mathematical concept. Now, what's interesting about this is that this isn't something I made up or anybody in here, mind you. It's a term that's used in statistics. It's used to build bridges across lakes. It's used to put planes in the air. It's used to do a whole lot of things. But when it comes to trading, it's often used as a strategy around mean reversion, which means as things get farther from the mean, they tend to revert back to it. So whenever people look at normal VWAP trading, right? If you have a VWAP, you normally have 1 standard deviation, 2 standard deviation, 3 standard deviations, and price comes up, tags the VWAP, goes up, and then people are trying to fade it to the reversal, right? That's standard. But when it comes to trend trading, what we've done is we've taken it to a completely different perspective by using the CWAP and then using a custom standard deviation to create an entry envelope that allows us to be able to plan the entry locations. Because if you're always just trying to get it perfect, like you're always trying to get it to touch the CWAP, well, you're going to miss trades like this. So it's not about perfection. It's about getting into good trades. So what we've done is we've modified standard deviation to be an entry environment for the CWAP so that you have a band that you can trade. This entire band is an entry opportunity. And then it's used for planning your entries, your targets, and your stop loss sizes as well. Okay, so this is something that we're going to be talking about as we get into the demo. Does everybody understand this for a second? I just want to make sure that I haven't lost everybody and everybody's kind of following with me to a certain degree. I want to see if everybody's with me. If anybody isn't, just type an N. I get it. We'll make sure you learn it. Everybody's following with me? Okay, good. Ben's asking a great question. He says CWAP. He's still not sure what CWAP is. Okay. Well, let's take a look at this. Let's say I've got a candle going like this. I got a candle going like this. I got a candle going like this. I got a candle going like this. Inside of those candles, there's what we call a volume cluster. Let's call it a VC equals volume cluster. Okay. And then ultimately inside the CWAP, inside the bar, there's a volume cluster, right? There's, you know, a bulk of volume, right? What the CWAP's doing is it's not looking at the total volume of the bar like the VWAP. And it's also not looking at closing prices. It's looking at the average of these points of controls or the cluster weighted average price. So it's a lot more responsive than a VWAP. It's a lot more immediate. Well, Stephen, we're going to go into that in the demo. So hold off all the questions, guys, and we're going to get into that in just a second. Because it's not that it's not anchored. There's a difference between manual profiles and static profiles. And we're going to go into that in the demo here in just a second. Okay. So when we look at doing things the hard way, okay, you got to look at things from an objective perspective. You could do things that aren't working for you, or you could do things that are much better for you if you have someone to teach you it, right? How many of you guys are okay with letting go of stuff that's not working for you, and you're willing to let me teach you something that's much more effective? I just need to know if you're teachable on this regard, okay? I want to make sure that I understand where your mindset's at when it comes to strategies, because there's a lot of people that even though they're struggling, they're not teachable. They just won't let go of whatever's going on in their own world in the trading space. So I want to make sure that everybody here is willing to let go of stuff, even if you've spent money on it. If you've bought systems and you're in trading rooms or whatever, I don't care about all that. All I care about is being very effective in teaching you how to make serious dineros. Okay, because that's all that matters to me. The more people that make more money using the tools that we produce, that's all that we care about. Okay, success breeds success. So I know the answer to that, but I normally like to lead with this before we go into new things. So I want to go into the trade setups. Okay, let's take a look here. Perfect. So let me just kind of do things. I like to teach things when I do the demos, and so you'll see here I got a little notepad on the left hand side. Okay. Well, what we're going to do first, we're going to talk about composites. Okay, so down here at the bottom, and I'm looking at a day trading time frame. So just to bear with you, I'm going to, let me just do this 1 second here. Let's bring this down just a little bit so everybody can see it. Can everybody see that now? That's the MES. The reason I'm using this time frame is because it's the strategy time frame that we scalp the 1 minute in the trade room. So I'm just using the time frames that we're using. Okay, now I'm going to spend most of my time on these two tabs here. I'm going to talk about the composite profiles here first, just quickly, because I don't trade composite profiles. I don't think there's an edge to it. I really don't, because everybody can see it. So let's just talk about it first, okay? A composite profile is a profile that starts at the beginning of a day or a beginning of a time period. Okay. Now, I'm not saying that you cannot trade the profile this way. I'm going to go through things and I'm going to just turn things off for a second. Okay. So let's just do this first. Let's go back. You can see I've got the session starting here, little white line, little white line. This is a 1 minute volume chart, right? You can see it here, right? And here's today's session, right? Here's today's session. Started in the Globex, went up, it came down, came up, came down, pumped in the afternoon, and we went sideways. Okay. That's today. So if I want to look at the volume distribution for today, I'm going to put on the profile composites. Okay. Now here's the thing. Inside of the profile composite, I'm going to turn the VWAP and the CWAP off for a second. Okay. And when I go into the profile settings, I can turn the profiles off. I can do all the displays if I want to turn the value highs and the value lows. I can control everything that I choose to on the profile. Okay. Most people that are looking at profile composites are looking at it for macro environments, meaning the point of control for the day, the value area low, the value area high. And to an institution, this is an expensive price point. This is a cheap price point because that's who's moving the composite. Like day traders aren't moving the composite. The composite is the entire day of volume, right? And ironically, you can look at a composite under different environments. If I wanted to go here and put it for the week, okay, if I want to put it for the week, I can go in here and there's the weekly distribution. If I want to go back and set this to, let's just say 10 days of data, you know, we've got 2 weeks of data. It's going to take a second to load because I'm loading tick data feeds. And normally, if you're going to load composites, you're going to load the minute feeds, right? So here's the profile composite for the prior week. You can see the difference, right? You've got volume here for the past week, and you can see it, right? I mean, it's there, and then you got the prior week, and you can go as big as you want for volume analysis. And most people you're not day trading like that, right? Like it's not really meant for day trading. It's meant for macro context, right? So when we do that, you can go all the way up to the month if you choose. And if you just put it to the day, then you just set it to the day, right? Now, why am I showing it to you like this? Well, because at the end of the day, you know, this is still very important information. It's still very important information because it's good to know where the point of control is, and it's good to know, you know, where, you know, all of this other stuff is and all that fun stuff. Okay. Let's go take a look at the MNQ, right? Here's another example of composite profiles, but not on a daily perspective. This is broken down in time intervals. And what I did was I said, I'm going to basically set the time intervals to start at the market open. And we're going to basically every 30 minutes create a new distribution. Well, that can be quite effective depending on how you want to look at the profiles, right? Like if we go back to, this is the market open right here. And, you know, you can see this is the first 30 minutes of the morning. This is the next 30 minutes. This is the next 30 minutes. This is the next 30 minutes, etc. And inside of that, you're going to have volume relationships. You're going to have a different VWAP for each 30 minutes. And you can see that there's a VWAP here and there's a VWAP there, and you know, VWAP trade here and all that fun stuff, right? You could also go in here. I have it set to VWAP. We can turn the VWAP off and we can turn the CWAP on. You'll see that the CWAP is a little bit different than the VWAP. And, you know, if you choose to trade composites this way, like we had a short here and, you know, but the problem with this is that it's a static composite, which means it's anchored to time. And time is not an edge in the market. Like if you say, well, just because 30 minutes have passed, or just because a day has passed, or a month has passed, yeah, you might have a really good trade on the monthly VWAP or the weekly VWAP, but you're probably only going to get 1 or 2 of them, right? If I were to sit here and turn this to say the day, okay, and you ask yourself, you know, okay, well, did I get a couple trades today on the daily? Yeah, you did. But you also could have got stopped out just as much as you had the winning trades if you were just trading the entire composite. So what I want to do is I want to take things to a different perspective. Now, I'm not saying don't use composites, because what most composites are used for is low volume and high volume analysis points, meaning, you know, the environments for low volume nodes. So if I look at, you know, this low volume node here, pegged off the value array low, that's a pretty solid trade location, right? A low volume node pegged off the value array high, that's a pretty solid trade location, okay? But if you were trading the point of control, right, well, depending on how you trade it will determine how you trade it. But that's not a strategy that I'm willing to teach, and I don't think there's an edge to all of that, because it's what everybody else talks about. How many of you guys would agree that that's not new to you, right? Most of you that know volume know the VWAP, and you know the value array high and the lows, etc. Can we all agree that that's not really, you know, fun? It's not something that's new and exciting, right? Well, what I want to do is I want to take this to a completely different perspective. Okay, I want to just look at this chart for a second. Okay, so what I've done is I've pretty much skimmed past the composites, because I believe that composites are best geared for low volume nodes and high volume node analysis, right? Because most people don't know how to study volume, and so it's usually an edge on bigger time frames. But what I really want to do is I want to really just focus my time to drawing manual profiles. Now, what's interesting is I'm going to do a quick deep dive on this so you guys understand this. There's two driving factors here. There's the static, okay, which is the static profiles. And then there's the real time. Now, the difference between the two is when and where to use them. So I'll give you an example. If I want to use static profiles, I can draw profiles wherever I want, okay? I have the ability to do whatever I choose to do, okay? But if I want to do things differently, and I'm ready to trade real time, like I'm not going back in the past, I'm ready to trade real time, we have an auto updating auction that will basically just say, okay, it's going to auto update on the fly. This will continuously adjust, okay? And let me just do this for a second. I'm in draw mode, multiple draw mode. There we go. And this will auto update on the fly. So what's really powerful about this is that as you're progressing through the day, once you're ready to start trading live and you anchor your profiles in the right location, what'll happen is this is going to be an auction that's going to be unfolding for you without you having to do anything. It's automatic. It's like a semi-automated volume trading system. And there's a time and a place to use this, right? So right now, obviously, before you were to say trade the dynamic hard right edge, I want to teach you what the volume trades are all about, okay? So we're going to delete this and we're going to get back, okay? So let's go back here and just take a look, and we're going to just write down the list. There's static and real-time profiles. Static is used to manually draw things wherever you want, and it's normally meant for backtesting and getting ready for the real-time profile. The big thing you want to pay attention to, though, and this is something that you're going to have to ask yourself, is, are you somebody that's going to trade the smaller trend trades or the larger trend trades, or both? Because depending on where you anchor your auction will determine the difference, okay? So let me just kind of go back for a second and just ask you, you know, what is the dominant trend for this market? Like, what has been the dominant trend for the past several days? Down or up? Okay, down. So you can see that inside of here, there's many downtrends, okay? Like there's many downtrends like this inside of these little legs, which are awesome opportunities, mind you, for scalping. But then there's these really big swings that are huge trades, okay? And the question is, well, which one do you want to trade? And the answer can be you can trade both as long as you know how to do this properly. So what I like to do is I really think tomorrow, Roy, if you're here, and Bobby and Jim and everybody that's on the education side with me, tomorrow we're going to spend the entire AMA on how to teach people where to draw your profiles. Because if you get this wrong, it could be catastrophic. If you get this right, it's going to change the way you trade forever. And Roy, I don't think you're a panelist. Are you a panelist? Yeah. So maybe you could put it to everybody. If you want to type in there, you can put it to every. Location is everything for sure. Yes. So let's just kind of just talk a little bit about the dominant bias, like just the dominant bias for a second on the NASDAQ. Okay. If you know that you're in a bigger picture downtrend, what I want you to start thinking about is when you're in this environment, okay, when you're in this environment, because if you know your main bias is down, then you should be getting ready to short, not trade the long side. So what I'd be paying attention to, okay, hosts and panelists can only chat with each other. Let me just do this for a second. Hosts and panelists can chat with everybody. Perfect. So when you're looking at a downtrend and you have an opportunity to start planning the trades, when it comes to volume, you don't know that this trend is here yet. You don't know that this trend is here yet. But you know this swing is here, and you know this might be an uptrend, right? So I'm going to give you an example of this. You can see an uptrend here on this chart right here. Uptrend. 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 Uptrend, right? You can see these uptrends. It's a 1 minute chart. So I'm going to show you how to use it from a scalping perspective, and I'm going to show you how to use it from a big perspective. Okay. We're going to do the big perspective first. So I'm just going to draw a little box around the level here. Now we're going to just take it right from here to here. Okay. Because that's the starting point of the uptrend. That's the pivot. That's the main swing. Ironically, if you're using the smart money concepts, it's probably going to be the anchor to a boss break. So if you're using the boss breaks, this is only going to help you with your profiling. So anybody here using smart money concepts? I'd like to think so. It's one of the signature trades in almost everything we're doing right now. But so I can almost argue the fact, Roy, that these are boss breaks, big ones. Okay. So let me just kind of show you what I'm getting at here. If I'm able to identify, excuse me, guys, in a situation like this, if I know that my focus is down and I'm looking at the market like this, what I want to do is I want to be able to identify that this uptrend is just a pullback. Like it's just the big picture is down, the dominant bias is down. So what I want to do is I want to basically wait for it to take out right there. As soon as I see this violating the lows, that's the indication that it's time for me to start planning volume. And so what I'll do is I'll basically put on a static profile, and I'll draw a static profile from the top all the way down. Now we're going to keep going here. Okay, we're going to just keep going. And it gets stuck on the VWAP. It got stuck on the CWAP. Okay, so let's just keep going now. Where is it going to now we're going to do the big ones first. We're going to do the large trend trades first. Okay, we're going to wait for it. Wait for it. Where's it going to go? There it goes, right to the CWAP. Imagine that. But if I were to draw this anchor from random places, then you got stopped out here, didn't you? Isn't that what everybody else is doing? Getting stopped out on every average, right? Because they don't know where the trend is supposed to start from or where it's supposed to end. Anchor points are critical in understanding volume trend trading. So we're going to spend the entire focus on that today and tomorrow. And I'm just using this as a quick example, but take a look at that. Now let's stop right there. Let's say you didn't take this trade or you didn't even know it existed, but there's an opportunity to see another uptrend here. 1, 2, 3, 4, 5 wave count in a pullback. It takes out the swing low, targets the low. If this takes out this level like this, then I need to start planning the big trend trade next. So let's just wait for it to take out the level right there. Okay. Now I'm going to wait for it to take out the level, and then I'm going to wrap another profile on this. From here or from the major swing, it's fine. We can do it from both. We'll go into that. Now, a lot of times what will happen is if you've got, say, an anchor point here, let's just kind of back this up for a bit. Whenever you look at a pivot, you sometimes have a lower high retest before the break, right? I know, Bobby, you and I have taught a lot of people that that's the true resistance, right? So if I were to, let's just go back for a second and just redraw these. I think this is where the strategy comes in. I want to spend a lot of time with this. If I know that this is the uptrend, boom, boom, boom. Okay, they come in to hang the support. They come back in. This is the lower high retest, which is the true resistance that breaks the structure. So we'll label this true resistance, okay? If I look at it, the same pattern, boom, 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 there's the lower high. It's the true resistance that breaks the structure. So if we use the anchor point that's truly driving the boss breaks or the structure breaks, right? And if you use those as your anchor points for the volume setups that I'm about to teach you, then I can assure you that your trend trades are going to be spot on. Spot on, because this lower high is driven by volume. This break of structure is driven by volume. So I can assure you that if you anchor from the volume, your trend trades are going to be in the right spot. Let's draw a static profile. Come right here. There it is, all the way down. Okay. Now, if I move my anchor, Lee, it has nothing to do with it. It has nothing to do with the value high or the value low for the anchor. In fact, what I can do is I can turn this off. If I go into the static, I'm going to turn this all off, value or low. Let's just turn that off. Let's turn point of control off. Let's just leave that. Let's just draw the extremes off. Let's just do that. All I care about is the volume envelope that's coming from the CWAP. Now, what we're going to do is I'm just going to pretend like you didn't do the first one. Okay. Like, let's just leave it at that. Okay. Let's just assume you're coming in and you're looking at it like this. You say, okay, well, I missed that trend trade. Perfect. You could take it from that swing point as well, or you could take it from this swing point. It doesn't matter. Okay. But here's the key. You didn't take that short. This is another major inflection point. So I'm going to take that lower high and we're going to target the rest of the trend. Down here, static, draw another profile. Boom, all the way down. Now watch how it respects the envelope of volume. This is standard deviations from the CWAP, not the VWAP. They'll be in different locations. You would have missed those trades if you were using the VWAP. Why is it respecting the CWAP? Because it's a responsive cluster weighted average. The volume weighted average uses bar total volume. It's lagging. And so when you use the CWAP, and you can see that tagging the envelope, there's a reason we use a standard deviation for the entry point and not the actual line, because it's a dynamic volume analysis. It's mathematically driven by volume rotations. So let's continue down. Now let's just assume if you think about this, right? Like I want to be able to see a clear uptrend for a break of structure. Like I want to see a clear environment where it actually starts violating this. Like, you can see it here. Now you say, well, Bashan, what about all these other pullbacks? What about all those wicked trades? Well, hold on a second. I'm only looking at the large ones. Am I not? The whole point first is to teach you how to map out the big trend trades. And then I'm going to teach you how to see all the scalp trades in between. So let's just keep doing the big ones first. Okay. Let's continue down. Continue down. You say, what about those ones? We missed it. Well, hold on a second. Let's continue down and take a look at where we could have drawn other anchor points. Every uptrend that you see on the chart, where do you see it? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 right here, right? This is not an uptrend. That's one push and then it didn't, right? This is, you could have drawn an anchor point from here. You could have drawn an anchor point from here because there was an actual uptrend that got violated on the way down. So if you look at this is a great example. 1, 2, 3, 4, 5, and then it fails and it gaps down off the open. So if I just take these as anchor points, new anchor points for the trend trades, okay, depending on where you come into the day or when your analysis is, let's just leave this out of here for a second. Let's just leave it at that. And let's just say there's a trend trade. Well, let's draw another one. We're going to spend a ton of time on this, guys, because it's important. Anchor. Okay, let's wait for it. There's those other ones that you would have missed. Right? If you're always looking at where to draw your anchor points, will dictate where the trend trade is going to come from. So the first thing is you need to understand the tool and what it's doing. The second thing you need to learn is where are we drawing the anchor points from? Because the anchor points are going to dictate where the volume respects the trend. Okay. Now these are for the major ones. Okay. So I'm just going to keep going down here and We're going to keep going. And let's say, where's the next down uptrend, right? Well, Nikki's asking after a boss break in the opposite direction of the overall. No, I'm going to show you when to start planning. We're going to go into the smaller trends in a second. Okay. We're going to go into the smaller trends in a second. So let's just assume here. Okay. Uptrend, boom, 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 boom. So here was an uptrend going into the close yesterday in the smaller time frame, right? And as soon as we violated that uptrend, okay, watch what happen. We take this anchored volume. We take it from here, or we take it from here. It's fine. Okay. Drop down off the CWAP. Now, here's what we're going to start going into today's trading action. Okay. And this is really important that you understand the difference between the big swings all the way down, catching these really, really big trend trades, because these are big trades. These are really big trades, mind you. Okay. The difference is going to be how you essentially plan the smaller trend trades. And we're going to extend on this in tomorrow's lesson. Let's take today's trading, for example. Okay. So if you look at this big swing here and this big swing here, if I just draw where the anchor that drew that was from here. Like realistically, if you really just left this and I just extended this static profile out from this anchor, even from this anchor, all the way down, I'll just watch it. It's the big trades. It's the inflection point from the big points. The big trades are here, which you can always pay attention to. Like this is not an accident that it hit that. Like that's a volume band from the CWAP. It's not an accident that we stopped here. But the question is, why are we not taking all these other little trend trades in between? Well, you need to learn how to use your anchor points properly, or you're not going to take them properly. So I'm here to tell you that you can trade both, which is why I think having the ability to go back and study the chart a little bit and say, okay, I want to take a look at a major boss break, right? This was a major boss break. Okay. This was probably a major boss break today that could have happened, and we could easily use those as anchors. So does everybody understand the big trades? It's really looking at the major inflection points where you can see an uptrend forming that breaks the structure. And it's the same pattern. You can see it here. We'll go into wave analysis in a second. We'll go into wave analysis. Yeah, we'll go into wave analysis because you're actually onto something, Ben, and I'll explain it. Okay, so you can see here's a good rotation down. Okay, these two were really solid anchor points for where that trend started, but that's for the macro stuff. That's for the big trades. So you're only going to get a couple of those, and they're really big. So prepare for them, because when they happen, you should not fear taking them. You should just execute on them like at whim. Like if I just took a real-time profile and I drew it from this anchor, you're going to see how it hits. Like these were two really big shorts today, really big short today at market open, and really big short today at lunchtime. Okay. You can change the colors all you want, Andy. Yeah, it's all editable, right? So let's go in here and just talk now a little bit about the smaller stuff now, because there's a lot of scalpers in here that are wondering, well, how do I participate on the other things? Well, we're going to take a look at the smaller trend trades now. And we're going to talk about where to draw the anchors and when to violate the trend and when to recount it. Now, wave theory, you don't need it, but it can only help you if you know it. So we have a video that we're putting out that will teach wave theory in the prop program properly. And I think it can add context to how many trends you should trade in the same direction. Okay. Now, before we go any further, this is today's trading action, right? So if I go in and I just turn the session template on so you can see the break from the overnight, just like this. That's the overnight session, Globex open. Okay. Now, can anybody see what happened in the overnight session first before the US Open? What happened in the overnight session? What happened? Anybody see it? Anybody here want? Gap down. Okay, that's the gap down. But what else? What happened after the gap down? We went into an uptrend, right? On the 1 minute, this is a 1 minute uptrend. We trended up. If you take a look at this, I'm just going to take this trade. Now, you might not see this as an uptrend. You might say, well, that's an oscillation. Yes, but then after that, we went boom, 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 boom. We traded up. Okay. Wave 1, wave 2, wave 2 ABC, wave 3, wave 4 pullback, wave 5 finished, and it didn't complete. If you know wave theory, you're either going to have this 1, 2, 3, 4, 5, and it's going to continue, or it's going to go 1, 2, 3, 4, 5 and break down. There's only two ways a wave can go. And we'll teach this in tomorrow's AMA because I think it'll add context to your strategy. So in this situation, when we look at this uptrend, I'm just going to use this low here for an example. And we're going to just go like this. Now I'm not looking to trade up. What's dominant bias been for the last week? Up or down? Are we looking to trade long or short? What's down? Down, Lee says, okay? So don't worry about all these uptrends to the upside because you're going to be aggressively trying to trade them long and it's very dangerous. But if I just stop right there. Now this is really, really important. Like super, 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 super important. Once the CWAP is violated this way, what does that tell you? Like, what does the story tell you? Like I could argumentally draw this. Okay. It's the same. Once the CWAP is this way. Yeah, we know that, Bobby. You and I are on the same page. But what does it tell you when the CWAP is violated down? Okay. But better yet, like if we think about this, like what's more important here to understand? Yeah, volume analysis. Volume is not holding the market up. Now, this is not the macro volume. This is this uptrends volume, right? Now, the reason I'm showing it from here, because this is the beginning of the Globex European session. I don't really pay much attention to this period of time. It's not important to me. 80% of the market's volume is traded from the Euro session and the New York session, right? I'm not really interested in the Asian session for these, right? So I'm only going to be paying attention to assessing my trend analysis on times when volume is high. Yeah, the main trend resumption is down. Now, here's the secret, guys. Like, this is for all of you day traders in here, because I'm going to teach you to trade the big ones. Those are the easy trades. You just don't get as many of them. Like, you got two massive shorts today if you just traded the macro trend, which is fine. But what about all the other intraday trends? Okay, so let me just remember what we said about the anchor points. There's two places you can draw your next anchor for the next trend. Once it violates this, you can do two things. Okay, you can draw your anchor point from the resistance that broke the CWAP. Okay, so there's the CWAP right there. So this is the resistance that broke the CWAP. So that's one place to put an anchor. The other place you can put an anchor is at the CWAP. You say, well, what do you mean, Sean? That why is that? Why would you do that there if you already have it there? Well, no, wait a second. If you put your anchor point here, it's not going to be the same as this CWAP. Remember, this is a cumulative weighted average price from the anchor. So this CWAP's all relative to where it starts. So let me draw another CWAP here for you. This is really, 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 really important. Now, one second, I drew the wrong one. Bear with me. We're gonna remove that one, and we're gonna draw the static. We'll do real time in a second. Gets exciting when you can use real time. So let's do this. Okay, so there it is. Now, I'm more concerned with this trade because that was a good trend trade, right? And you say, well, what about this one? Yeah, well, you can. It's just, it's not really ideal to take it, and I'll explain why, but we'll go into this in a second. The other one you can do is you can take the anchor point from here, okay? The problem with taking it from the CWAP always, and this is something that Roy and I discussed heavily, is that it's very responsive. So it happens very fast. And I think for me personally, the easiest way is always going to be from the resistance that breaks the CWAP. It's going to be more responsive and it's going to be easier to learn. Okay? It's going to be easier to learn. Now, if we take a look at it, CWAP was violated right there, wasn't it? So if you really think about it, there was only one trend trade here. Okay. Now you can see here we have a violation. Perfect. So that means it's another time for me to draw a new trend, because guess what? When the CWAP's violated, it's violated. It's not an overshoot, it's violated. So this is where I always pay attention to the wave counts. And that, for those of you that are asking about it, let's take a look. Wave 1, wave 2, wave 3, A, B, C to wave 4 to wave 5, hit, failed. So we're going to spend time counting. Can everybody count to 5? Everybody here count to 5 for me. 1, 2, 3, 4, 5. Because you're going to learn this if you're going to be trend trading anything. And you're going to see why it's important. This was a trade here that you wouldn't have taken. This is a trade that could have been valid. Now we're going to draw another anchor point. So if I were to extend this CWAP, okay, the CWAP was violated here. So it got violated back again to the downside. Well, I only have one swing before that. So that's where I get to put my trend right here. Static right here to the top. Let's draw it down. Take a look at the trend trades. How many trend trades today since the open? 1. This one here violated. 2, 3, 4, 5, and then it fails. So let's count. This one was a good one. If you didn't catch it, you could count that all as wave 1 impulse. 1, 2, 3, 4, 5. Most of you wouldn't be taking this one. Okay, that's just how most trend traders don't take past wave 5. Okay. You guys are asking a lot of technical questions. Let me get into the strategy first, and then we'll go into how you can adjust the CWAPs and everything, because all that's manually adjustable, Graham. Yes. We'll go into questions at the end of the event. So watch as it breaks. Violated. So all you can do is you can just extend your CWAP out like this. And once it violates back up like this, I'm waiting for it to cross down. Now, I know, Roy, you and I talked a little bit about drawing another profile to the upside. You can do that too. But if you're not trading to the upside, there's no need for us to have a profile to the upside. Could you have traded the trend trade long to the upside from the right anchor point? Absolutely. But this is for those really, really, really advanced people in here that know how to trade bullish sentiment in very bearish markets. Like, if you didn't catch this quickly, that's the only trade, because if you can count 1, 2, 3, 4, 5 didn't complete. Why? Because we're in a downtrend on the big time frame. So most wave 5s won't complete in the small trends intraday. So this is where you would only want to take wave 2 pullbacks in the uptrends if you get them. Like, it's just, you know, but let's stick to the easy part of this, right? Let's just stick to the easy part of this. Let's carry this on, waiting for it to violate back down. Now, look what we got here. I have the high here, and I got the lower high. Where should I draw my trend from? If everybody was paying attention earlier, where should I take it from? The top or the second one? Lee's got it. Sally's got it. Graham's got it. Looks like got a bunch of smart catchers in here. You guys are catching on quick. Good. Makes for an easy trading session. Static, draw the profile from here, bringing it down. There it is. But guys, you're going to see here why this is the powerful stuff here, because there's a whole lot of different anchor points. Your volume is always changing because the market's always changing. If you're just using one VWAP all over the place, then it's not a freaking, that's not an edge. That's the composite VWAP. That's the composite. Right here, we have a series of several different ways in which the volume trends are being used. Right? Completely unorthodox way of designing volume analysis. So we count. 1, 2, 3. Let's continue. Let's count here for a second. 1, 2, 3. A, B, C to 4. Lower high. Didn't complete. Wave 5 impulse didn't complete. It happens many times. Wave 5 impulse normally doesn't always complete. Wave 2 to wave 3 impulse is always your best trade in a big trend. But remember, this is a day trade. You got a whole lot of them. Most people are worried about catching the trend all day. They're like, oh, I only get a good trend trade once a trade. No, this strategy design is you're going to be able to trade the trends all the time. Now let's continue on. We're not going to trade to the uptrend. You say, yeah, but wait a second. Could I have traded this uptrend? You could have. You could have, but what's dominant bias? What are we doing? Are we trading more longs or shorts, guys? Now, if you did decide to trade longs, where would your trend be? Well, you could go from here or from here. I would argue the fact that you shouldn't do any longs right now. Okay. Okay. Shouldn't do any longs. It's going to be messy. It's going to be a messy fight because it's a lot harder to trade long in a bearish dominated market. Go from the lowest low if you want, catch that trend, but it's harder. Trading longs is harder in these markets. So what I'm going to do is I'm going to just extend this CWAP out. And when we break back through it, right here, right, as soon as we get on the other side of it, right here, and I want it to clear the bands. I don't want it to clear the CWAP. I want it to clear that first standard deviation band that we've set up. Okay, why? Because I want to see a clear shoot through the CWAP. I don't want to get on the other side of the bands and then it rips. So here's what we're going to do. Let's take a look at where can we draw the CWAP to the downside. Let's draw here on the chart. This is the lower high resistance that took it out right here. You could say this one. We'll draw it from both. You'll be able to see the difference. So let's just draw it from this one here first. Static. Look at the tag on the retest. Like, look at the response that it gets on the retest after it violates the CWAP. And if you draw your anchor in the right spot, look at the retest before the drop. That's wave 2 pullback. Now I'm going to count all the trades today to the short side. Let's just draw this down. Okay, we'll just wait for it here. Now let's count. Let's just count here for a second so you understand. Wave 1, wave 2, wave 3, wave 4, wave 5. Don't trade after wave 5. Dangerous. Dangerous. Now I'm going to leave this here for a second. You say, well, what about trading to the long side? Well, most people aren't trading long at this time of day, but and in a short dominated market. But let's just assume you wanted to draw the CWAP long. Let's just draw it. I'm going to use real-time profile. Why would I use real-time profile? Anybody here want to take a guess at that? Because I'm using static profiles for everything in the past. Real-time is to gauge what's happening now as it's unfolding. Okay, I'm going to do from here. Just automatically updates on the fly. And this will continuously update until you decide to turn off real time and turn it into static. Now, the reason you do this is so that you're not having to always find your anchor points in real time. You pick it and it automatically updates. And then what you can do is I can turn off the real-time profile. So let's turn off the display the profile. Text, extreme text, profile, boom, off. And I'll just leave it at this. And then what I can do is if it violates like it just did, then I can just take another real time and just take this and take the lower high and then let it unfold. Let the CWAP unfold in real time for you. You don't need to be drawing this in real time. You need to place your orders. You don't need to be focusing on where to draw your volume profiles while you're trying to trade. That's why the real-time mode was designed, because it will allow this, it'll automatically update. And all you need to do in real time is once this kicks in and pulls back, let's say it does this, right? Comes down, retest, drops down, wave 3, wave 4, wave 5. This will draw down like this. You'll violate it. And then when it comes back like this, as soon as you see that hit, just click on real time again, anchor it here, and it'll just boom, it'll shoot in real time for you. You just keep updating real time all the time. Well, great question. Ben wants to know where the entry and the stops and the targets are. Well, let's go back to all the other trades and I'll show you. So if we're just looking at scalps, okay, so let's go here and let's take a look at, most people aren't trading into the open. So I'm not gonna pay attention to this section here. Most people aren't trading into the open. Okay, is this a fair statement? Most people don't trade into the first 10 to 15 minutes of the market. 80% of people aren't trading into the open. Okay. If you were trading into the open and you wanted to trade 10 minutes after, let's plan this trade out right here. Your entry is going to be from here to here. This is your entry spot. You can enter anywhere in this section. Okay. And what you'll do is you put your stop loss on the other side of that band. Why? Because you don't need to have it any bigger than that. If it violates that, it's not holding the CWAP. So what you do is you basically take your risk and reward tool and you put your entry here. There it is. And there's your trade. Does everybody understand that? 2-to-1 R multiple on the other side of that band. And normally you want to have your 2-to-1 target the swing that led to the pullback. Just like a boss trade, you want to target the swing. You could do it like that. Does that make sense to you? Everybody understand that? That's not difficult to learn that, right? Now let's continue back down. As soon as it violated here, okay, as soon as it violated here, you put your anchor here, right? Because it violated the band here. So this is exactly when you would put on your real-time profile, because you're not doing static. If this is the hard right edge, you're doing real time. It's going to be in real time. So what you do is you just trail your order. You just keep trailing your order on this line. You're short. And what you do is you plan your order as it comes in. Let's wait for it right there. Okay. Now what I will do, and this is really your decision, because sometimes people say, well, I don't want to have my stop so tight. So what I'll do is I will use a factor of 2-to-1 to the swing. That to me is giving yourself a little breathing room, and it's the exact same method that Roy and I teach for the boss breaks. So what I'm going to do is I'm going to just give you a little bit more breathing room, okay, right here. And I'm going to basically say you could arguably say that we could go right here 2-to-1 to that, okay, just like that. You could do that. That's a pretty good argument, right? Because if it violates on the other side of the CWAP, it's not a good trade, right? It's not, volume's not being respected. So you have to be okay with that. You need to understand that, you know, and there was no lower high on this entry. Exactly. So you just take the anchor that broke the swing, right? There was no lower high. But does everybody see that, you know, having, to me, the way that I would do this is I would always have my 2-to-1 target at the swing that led the pullback, because that's what it is, right? You got an impulse, right? That's the swing that led the pullback. So in a trend trade, they're going to target the lows. That's the goal, right? So that's why I would have, this is 2-to-1. So though that was one 2-to-1 trade here. Remember, you need to know your wave counts so you don't take past wave 4 pullbacks. This is wave 2. This is wave 4. Does everybody understand that? Okay. So let's continue. Can we use the SMC for, yeah, absolutely. You can. Absolutely. So let's continue down. Let's wait. Now let's talk about this trade here for a second. Wave 1, wave 2, wave 3, wave 4. So what we do is we're gonna plan this trade. We're gonna go one at a time. We're just gonna do every single trade that happened today. So we're here. There's the swing. Okay, you hit 3 targets, 4 targets on that trade, right? Now you could scale out, like, guys, I'm not in the business of trying to tell you how many targets you should have, or you know, are you a 2-to-1 or a 1-to-1 R multiple trader? These are all 2-to-1 trades with 4 potential scale outs if you choose to. Okay, or you could just go all 2-to-1, whatever you want, or 1-to-1 and 2-to-1, and then go to break even after 1-to-1. It's all your decision. So that's 1 trade, 2 trade, 3 trade. I'm just going after all of the shorts today because that was the plan. So there's wave 2, wave 4. We're not going to trade wave this one. It's not a good trade. I don't care if it works. It's not good trading. Oh, wow, it worked. Oh, wow, those 2 worked. I don't care, because it's dangerous to start trading every single trend trade. Like that's wave 5 and wave 8 and wait, you know what I mean, guys? Like it's not expected. It's in a perfect world, yes, but it's not normal. Okay, so let's wait. Let's wait for it. There. So let's wait for it. We're going to continue down. Wait for it. We didn't get it. We didn't get it to touch. It didn't touch there. Let's continue down. It's right there. So we're going to target this low. Okay, so let's just draw the risk reward tool on here like this, and we're going to target the low. So 2-to-1, we'll put it here. There it is. There it is. So there's the other trade. if you draw your anchors in the right spot, you guys are going to be on point for this. So this is wave 1 impulse, wave 2 pullback, wave 3, wave 4. Now, arguably, some people would say, well, isn't this wave 2 here? Isn't this wave 4? Yeah, you could be like that. I mean, it's subjective. To me, this is a pretty strong impulse, wave 2, wave 3, wave 4. And in a perfect world, they're going to come and attack this. But a lot of times they do this, which is why I think you should be going to break even at a 1-to-1 R multiple on these trades. This is just my experience talking. You guys can do what you choose to do, but I would arguably target that at a 1-to-1 right there. You see how it hit that 1-to-1? I would arguably go 1-to-1 break even, because if it doesn't give you a push through after 1-to-1, it could very well come back and tag a breakthrough. So this to me hit a 1-to-1 target and then they pumped through. Do you see it? And I would go 1-to-1, break even at 1-to-1, or, you guys can choose how you want to manage your trades, right? I'm just showing you all the setups from today. So let's continue down right there. So this one is a quick trade. This one is not a very, very big trade. You can see how they came back. They pulled back into this trend right here. They retested it. It's a quick scalp, but it's still going to give you the opportunity to trade 2-to-1. Trade 2-to-1 to the low. Right there. There it is. So let's continue down. Keep it going. So let's talk about this. Okay. Let's count the waves. 1, 2, 3, 4, 5. Should we be trading here or no? Yes or no? You tell me. Well, it's kind of cheating because you can see the other freaking profile I drew, but you know what I mean. So we're not going to trade that because it's not a good place to trade. Okay, so we're not going to trade long. I don't care if you can, if you choose, it's your decision. I mean, you could take that long trade here. I mean, if you were taking a long here, take a look at the heat you're taking. Like, you're taking the heat. Now, here's the other thing. Like, look where I drew the anchor point here. Do you see where I drew the anchor? Is at the low. If you were following the same logic before, you could have drawn it from here. Yes? Let's do that again. Let's draw this. And let's draw it from here. If you were trading long, let's draw it from here so you guys can see the static draw. Right? You maybe would have got that one if you were lucky, if you front runned it. But like I said, this is not, I'm not a big fan of trading long in a DOM-dominated bias market, right? It's just very dangerous. Now, you could ultimately take this as your guidepost instead of waiting for it to break this CWAP. You could ultimately use this as your guidepost and see how it broke here. And then ultimately you could draw your trend trade from this anchor down. Watch. Let's see what happens. As it broke this right here, the lower high is not a lower high, it's a double top. So I would draw it from this anchor here. And let's just watch as we draw it. Static. There's the trend trade, and you can see it violates back up to the long side. Okay. Now for me, the way I would normally do this, and this is just me, I'm just going to show you what I'd done before in the previous example. So I'm going to show you here. I'm going to show you here. I would much rather wait for them to come back and break this CWAP. And the reason for this is it's the downtrend CWAP. Now, you can do it like that, or you can do it like this, take it from the lower anchor down here. It's your choice. I mean, there's a few different ways, and we're going to talk about that tomorrow. But let's just draw this here. As soon as it violates this, okay, to the downside, you can see as it goes through like this, went flat, okay, and as soon as it violates here, let's wait for it. There it is. So you can see where this violates all the way down like this, and you can see it. I mean, you can see where you draw it if you choose to draw it from this side to that side, that's the real-time profile. And so to me, this is the real time. And you can see what's happening right now. It's violating that CWAP, and then it's going to come back for a real-time push. But the markets are closed, right? So nobody's going to trade right now. But to me, most people are done at this time. Yes? How many of you guys are done trading into the afternoon session? Like, this is actually 2 hours. So that's, yeah, most people aren't trading this time. Most day traders are done in the morning, right? I mean, maybe you want to trade in the afternoon. You like to practice in the afternoon? Yeah, done at 11, right? Well, I'm 2 hours earlier than 11, so I'd be done here. This is 9:30 is 11:30 to me, so I wouldn't have even taken this one because that's the European close right here. So like, even if you look and count, so just counting the trend trades from the scalps, 1, 2, 3. There was one, oh, excuse me, 1, 2, 3, 4, 5, 6. I mean, if you're taking that one, I'm going to count five trend trades, right? I'm not going to count the last winning trade because I don't trade into lunchtime. So I'm not even going to count this trade because I don't like cherry picking. I don't believe in it. I don't trade into the afternoon. So I'm not even going to use it. So let's just talk about that for a second. Remember, that's the scalps. But then what about the big ones? Like, what about those big trades that we were talking about we had from way up here? Remember, this trend has still been intact. So if I'm looking at the big trades, wouldn't I be looking at it from here as well? And also from here as well. Like those are the two big trend trades, right? Those are the two rotations. So if you take a look, there's the first, that was a big one. So if you were taking the short here outside of the scalps pre-market, you'd be loading into this trade, and let's just plan it. Let's plan it from the first band. Okay, so let's plan it down to this low, because that's the way we're targeting, where we take the entry here to go short, our 2-to-1 targets down here. Does everybody understand this? These are all the scalps that everybody's talking about, but I'm talking about the two mega trades today. Okay, so let's go into it. And let's just plan it. The risk reward, 2-to-1. 2-to-1 to the low, right there. That's the first mega trade. We'll call that the Megatron, right? And then let's just see if it comes down for the second one, right? There's two CWAP bands here, so you can play both. There it is. So here's the objective, yeah? So this is the second one, and the low that led that is down here. So let's draw that down here, and there's the second mega trade. So I believe that the pre-market prep, Roy and Bobby and Jim and everybody else in the network of traders that teach, the morning prep should be what's the mega trades and what's the scalp trades, because you're still going to be trading order blocks, you're still going to be trading those other trades and all that. But the way you look at this is really like plan the big trades and then scalp the small ones, right? Let's just open this up to, there. Like you've already taken profits. I mean, you could have peeled out easily. You can easily take it from the, if you just want to have a little bit of a shorter target, like that's fine too. You could have easily got a 1-to-1 on that easily. But this is in the afternoon, right? Like at the end of the day, you had one mega short and 5 winning scalps. That's just 6-7 winning trades today, just on these trend trades alone. Now that's the NASDAQ. I have a couple people here want to look at the MES, right? Let's just do the same thing on the MES. Same thing. I'm looking at a 1300 volume chart. I'm going to go up here to plan the mega trades. I took one of them a while back, but we'll talk about that after. Okay, so let's go in here and just plan the mega trades, right? So I'm just going to keep doing real time POC. I'm going to turn them off so we can see here. There it is. So there was the mega short. And, for this, at this here was there. Could you have taken another short on the S&P? Yeah, you could have drawn it from up here if you wanted to take it, because that was the last one. And there it is. Because I took that short last week. That was a trade I took. And then this was the one today. It just depends on where you want to start your anchors from, which one you want. But I mean, ultimately, we're in a strong downtrend. So what I'm looking at is the mega rotations. Boom. Right? Which is the break of structure, the bake of structure. Aren't you at risk of keep drawing mega trade? What do you mean? Aren't you at risk of keep drawing mega trade lines? I'm not sure I understand what you mean by that, Graham, but no, our software is pretty efficient. Yeah, you can draw as many as you want. Now you could keep going here, and there's the other trade here, and that was the S&P. So there was a two trades just like on the NASDAQ. And could you have drawn all those? I would argue that all of the same shorts were still valid in the S&P as they were for the NASDAQ today, all the scalps. Right. So we could go into drawing trades all over the place if you choose to. And You know, it really just depends. We could go into a different day if you want and take a look at, you know, the scalps from a different day, right? You know, you guys get the picture, right? I think tomorrow's class will be very, very efficient for us because we're going to go over back testing every intraday trade, anchor point, drawing. The big thing I want to talk about here is everything that I've talked about that. Well, how is this used with SMC? Great question. Why don't I show you? Let's take a look and let's load this, and let's just take a look and load it. Okay, so let's see here. Let's take a look. Now you could take a look at the SMC, right? If you choose to. Could you use the break of structure as your anchor? Absolutely. And that's powerful because now you're not trying to figure out where is the rotations. You know you're in a downtrend. So every time we break, the boss is down. The big ones, not the little teeny mini ones. You could use the mini ones for the scalps, absolutely. But if you're looking for the mega trades, that's the anchor here, and there's an anchor here, right? So let's just draw that, right? Let's just do that here, real time, draw it from this anchor point. You could draw it from here or the lower high. Either way, you can draw, you can take a look at your preference. Take a look. I took that trade last week, mind you. So that's why I'm showing that as a real good example, right? And then as you take a look, there it was, right? Now you're using the boss trades to tell you where to draw your anchors, which is a very, very valid use. I think it's a really, really great way to do things. And if you choose to, okay, let's take a look at this. I'm just going to delete it again. Oh, let's take a look here. There it is. So let's just take a look at the last boss. I'm not interested in the up boss breaks. I'm looking at the down ones, right? So let's just draw another one here. I'm using real time because it draws all the way for me. I don't need to calculate it right there. Take a look. We tagged it all the way down, right? After we had that boss break, okay, where did we come up to tag the downtrend? Boom, boom, boom. Now let's just keep drawing it on the boss breaks. Let's just, this is why this is the chart we're going to be using it for trading in the trade room. If you take a look at the boss breaks here, you could take that and draw it right there. Now you would have got a little bit of a scalp here. You could have got like if you take a look at the scalp trade after that boss, if you're using real-time profiles like this, as soon as that boss breaks, you can take that and then there's your trend trade right there. Boom. Like that's a scalp. But take a look at the size of the rotation from here to here versus here to here. Which one do you think is this? These are the mega trends. And these are the scalp trends, right? So when you look at drawing your anchor points, this is what we're going to be talking about tomorrow and how to leverage the tool sets together. And you can see using the anchored VWAP, if you put it from the lower high, it's not wrong either, right? Like you can take it from the lower high. It's not wrong either. You know, it's just, I find that sometimes in these little ones, I really prefer, if you're going to use the little trends, use the swing high. It'll give you a little bit of a bigger trade. Yeah. And then you get, boom, you get 2 trend trades there. Okay. And then you wouldn't take those after, right? And then after a boss breaks here, there's a mega trade. I would argue that this could be probably a scalp trade. So let's just draw it over a little bit. Let's just continue to draw the real time. And you can use the boss breaks as a guidepost. Absolutely. Right. And let's watch as it comes down. It was pretty responsive to that. I don't think I'd want to trade this trend like this. You know, yes, it worked for a target, but I don't like when I get such a steep capitulation and you see all these in here. I wouldn't trade this because it was too much of a trend for me. I would wait for the next trend down. You're going to get another one. You're day trading on a 1-minute chart, right? But this is a great example of, you know, we had a really strong trend that day. Okay. But you guys understand now how we're using this. You can use it really to be fair. Like if I look at this mega boss, like just here to here, boom, boss break, right? You could do the anchor points from 2 spots. You could do it from here or 3 spots, here, even the lower high, because those are the major swing points that drove the boss break. And oh yeah, we'll be using this in the room for sure. But the big thing is not rushing things, learning how to use the tool properly, right? So if I draw it from here to here, like take a look at the trend trade after the boss break. That's the critical part I want to show you here. Take a look at this trend trade right there today after the boss break. This was the big boss break. Let me just do it again. I'm not making this stuff up here, guys. This is how it works. Major swing to a major swing boss. As soon as we get a boss, expect a pullback. And then what ends up happening? You anchor it from here or here. Okay, if you're anchoring it from the real time, take a look. Boom. Yeah, as soon as the boss has been violated. Absolutely. And you can see how you could have traded this down, but I like the idea of using the boss breaks for trend trades because it's major structure. So this was something I was going to talk about in tomorrow's AMA because it's a bit more advanced and not everybody's probably using the SMC. Some of you are, some of you aren't. But I'll give you an example. Like even if you were to trade long, like look at the, I know you shouldn't, we're trading in a short bias, but take a look at this. Was the boss break to go long this morning. If I draw it from the anchor point that led to the boss break, right? Or even better yet, I'm going to take it one step further, right? If you draw it from the order block swing, which is the order block here, all the way up, you can draw it from 2 points. You could take it from the static swing low and there it is. You get the trend trades long, okay? Or better yet, okay, if you take it from the order block right here. And I just think that we went sideways because it's the market's done today. Like it's market goes sideways when there's nobody trading it, right? So, you know, for me personally, great questions, guys, because, you know, absolutely. My intention tomorrow was to talk about boss breaks and using them to your advantage, et cetera, and how that can play its, you know, factor in all of this. But I didn't want to overcomplicate the webinar. Did you guys learn something from today? Did you guys learn how to use things to your advantage? I mean, if you traded every single thing I taught you today, you had you had 5 scalps and 2 big trades. Yes. And like, this is just the start, guys. Like, as you keep drawing these and as you use it, you could use it on any time frame, any market, any bar type. Okay. The key here is to basically understand why you'd want to use this, because if you're just using the composites, it's not an effective way. It will be, Graham. It will be. Yes. Yes. And anything that is purchased will be attributed to that. Yes. So trust me on Graham. It's a good question. Yeah. So guys, I'm going to go back into the PowerPoint. I just wanted to show a couple trades that I took. So like these are trades I took, and you know, I don't have the bosses on here and stuff, but this is literally trades I took last week. And I just like to show you like the targets to the stop sizes, right? Like it's scaling out at 1-to-1 and 2-to-1, right? This is exactly what I was talking about. Here's a big trade I took on the S&P. It's a big short. It's a big short. It was one of the big trades. It wasn't the scalp trades. It was the mega trade. When I say mega trades, it's the big trends, right? I mean, you're catching the bigger moves. Normally that would be a pullback on a much higher time frame, right? But you're using the 1-minute rotations to see it easier. Okay, so this was a big trade, and I got both targets on it, but I moved my target up to the third target on that, and I peeled out. And I missed out on a lot more, but it doesn't matter. It was a great trade. Okay, so here's another long, right? As you can see where I took the anchor point. Like these are just examples of where you can look to engage in the trades, right? When you take them. And you can see as we violated the CWAP, I used the higher low as my anchor to catch that trend. Now you can see here my stop's a bit big for this trade. Technically, what should have happened is you have a 2-to-1 target to here. So if your stop is here, that's already hit 1-to-1 target, right? And I do think you should be doing it that way, because if you're trading in a prop program, you don't hold on for the fences. You need to take profits, or you're not going to, your trailing drawdowns are going to kick you in the butt. Does that make sense, guys and gals? So what I want to do is, let me double check here. Let's double check where we're at here. How many of you guys found this to be easier for volume? Like, volume trading to me is actually not an easy concept. Like volume trading is very subjective. Low volume nodes is very subjective. High volume nodes is very subjective. Anchor points to major rotations is not. Anchor points to solid big areas is much easier for trend trading than trying to trade low volume nodes. It's way less subjective, Robbie. Yes, that's why I think it's a huge edge, and most people will adapt to it and learn it quickly. Absolutely. And I believe I can teach anybody this because I can give you a hard rule to where you draw your anchor point and you just never deviate from that. Rule number 1, trade in the dominant bias. Rule number 2, always draw your anchor point in the same spot. Rule number 3, only trade wave 2 and wave 4 pullbacks, never after that, right? No, I would trade this on any day because you're going to have mega trends and intraday scalp trends all over the place. Yeah. But we'll teach you the trade plan tomorrow, which Roy's going to adapt into the trading room for the prop program. Okay. We'll be trading it in the new prop program, Ben. Yes, it will. So anybody that, I'll answer those questions in a second. Okay. So what I want to do is I want to see when I can give a license. So I'm going to give you a detail here. And what we're going to do is, this is the offer slide. I'm going to break this down. Okay. Many of you have already gotten the emails that ARC's taken over NeuroStreet software, all that fun stuff. That's all true. So ultimately, this is a huge discount for everybody. $9.97 is the retail price on ARC's website. Okay. 50% off for everybody. Okay. And what I'm going to do now is I'm going to give one license away. And if you end up winning and you purchased, then don't worry, we'll refund your purchase. And we've done that before in the past, we've refunded. So here's what I'm going to do is I'm going to give away a license. So do me a favor and just choose the poll if you want. And then we'll go over questions in the second. Just let us know if you want to win a free license or not. And you guys know us, we're straight shooters. If we draw your name out of Ashley's randomizer 2000, we'll give you your money back. It's $500, right? So if you don't put your name into the win, we can't give you a free license, right? Now we're going to be doing this tomorrow. So let me explain this. The offer ends Wednesday. This is not some extended discount. This is the only discount we have for this product. And it's much cheaper than all of the other product launches that they do. Okay, that we do with ARC. Okay, so it's $495, $498.50, right? For the what I think is the most sophisticated volume tool that's been built for manual profiling. And what's really cool about this is that it's going to be used in the prop program. So anybody that's in the prop program, you're going to see it traded all the time. So don't be afraid that it's not going to be used. You're going to be on your own trying to figure out where to draw your anchor points. No, I'm going to be in the trading room with Roy and Bobby and Jim and myself and all that fun stuff. Okay. Now, a couple things here. We got a whole lot of people want a free license. Fantastic. So I'm going to end it in 1, 2, and 3. Okay. Andy says coupon didn't work. Well, there's probably a reason for it, Andy. So let Jim and everybody else help you and we'll get you squared away. Okay. Yours worked. Try capitals. It needs to be all capitals. AV launch, capitals. Okay. Now, what I'm going to do, guys, okay, I'm going to run a poll just so I know how many people are going to be in the AMA tomorrow. So tomorrow, okay, listen to me. I'm going to be hosting a private AMA for only people that have purchased and used the product. So if you're planning on purchasing, please let me know now in this poll, because I need to prepare the resources for tomorrow's AMA. And I want to make sure that everybody that is using this, I can provide the workspaces and the chart templates and everybody moving forward. Now, moving forward, this is the last product launch before we do the big event for the new transition with NeuroStreet and ARC's merger. So as you know, there's a merger going on and there's a whole lot of stuff going on between all the products and the websites, and I get all that. This tool will be a part of the new prop program moving forward. So if you buy it today, and we launch the new program moving forward this week, we will give you credits to what you've paid for. So don't worry, guys. Your money is always good here. It's not, we're not here to gouge anybody. So anything that has to be used, you can get credits for anything moving forward. So that shouldn't keep you from doing anything, right? Like, we're very fair with everything that goes on between the businesses and everything, right? So I just like to make note, because I've seen some questions. Is it part of the prop program? Is it part of the suite, et cetera? it will be part of the trade room program. It will be part of the big package. It will be part of the new program moving forward. Tomorrow, guys, let me just double check. I think I have the details. I already gave away the software. Fantastic. So flashy, bling, blang, bloom. Tomorrow's event, 3 p.m. Eastern. Be there or be square, because I'm going to do it in the afternoon after Roy's trading. It works on everything, Andrew, every bar type, every time frame, because it all boils down to where you draw the anchor points, which I think is why it makes it to be so amazing. Tomorrow we'll look at other markets, other bar types, other everything. Okay. So a couple of people said the code is not working. So where's the code? Right here. 50%. Do you have the percent line in there? It's working. Yeah, I know it's working. So either you're typing it in wrong or something's happening on your computer, but just email in and we'll get you. Yeah, there it is. You got it to work, Nikki? You got to put the percent, 50% AV launch. AV stands for anchored volume. Okay. Scroll down after you put the code. But Lee got the code works. Thank you, guys. Okay. So we've got user manuals. Very, very well done by Mr. Jeff Zimmerman, one and only. The guy's a tank. He does things better than anyone else on the dev side. He's just amazing. Okay. Yeah, we don't do trials, guys. So if you don't like it, don't buy it. Like, I don't have time to worry about that, right? We're traders. We trade funded accounts. We're prop traders. We're using tools for the trade room, right? And if you are in the trade room and you see Roy using it, you like it, buy it. If you don't buy it, right? And the whole questions here. Let me go over the questions, guys. Will this work on any market, any bar type? Yes. Can we use it on any time frames? Yes. There is no difference anymore, Felipe. Yeah, there is no difference. There's no distinguishing between prop traders or everything, because after the merger, everything's moved over to ARC. And so everything will be a package after next Friday. So be on the lookout, guys, for the event this Friday. It's a big one. It's very, very important. It's a make or break event. It's where we break down all the merger discussions, all of the transitions and changes for the prop program and the new direction for NeuroStreet, and the big secret that we've been keeping that everyone's going to love, but I can't share it until Friday. Roy, tell everybody, get on the mic, Roy, just do me a favor and tell everybody how freaking crazy everybody's going to be. Just
yeah, it's gonna be wild, guys. It's been hard for me not to spoil the secret yet the past couple of weeks, but just wait, you know.
And it has nothing to do with our software. It has nothing to do with anything that we're selling. Let me just tell you, it'll be tough. It'll be tough for them prop firms out there.
That's all I gotta say.
It'll be tough for all them prop firms out there. Mum's the words. Mum's the words. NeuroStreet's coming with a big bag of freaking kick-ass. Yeah. Anyways, guys. No, can't go into details, guys. Can't go into details. You can't give it all away in one event. So, anyways, guys, I'm feeling a little under the weather, and I need to go and eat some food and drink some vitamin C and jump off a cliff or whatever the case may be. I need to save my energy for tomorrow's AMA and ultimately the Friday event. Guys, I'm here to help you. The anchored volume has been my accumulation of volume experience and education experience. I can assure you this, that once you learn how to draw the anchor points, everything will unfold for you. Everything will unfold for you. Everything will make sense once you understand the violation of the CWAP. And tomorrow we're going to spend time doing that. We're going to look at different time frames, different markets. We'll do it on the 10-minute as well, eh? Roy, we'll use the anchored volume on the 10-minute charts. We'll use it on the Renko charts. You'll be able to see. I don't think it's as best used on the Renko charts, to be honest with you. For the AT trader should be left alone. It's its own system.
Sure.
But we'll go into all the different workspaces, etc. And on the front for the easy algo, it's coming, guys. It's coming hard. So we just wanted to get this out before we run the beta tests on that. And the last thing that we're doing is the easy algo release. So it's coming very soon. Yeah, doing very well on that, actually. So very excited for that. So no, the easy algo, most people already have it. Yeah, most people already have the easy algo. from what I understand. So, guys, have a fantastic day. Thanks for being here. Hope you guys learned something and found that informative. Really looking forward to you. And Jim, you got a poll here for a bunch of people that need some questions answered. So we'll follow up with them. Jim will get in touch with you guys, all those who requested a call. And as the founder of NeuroStreet and partner with ARC, guys, we salute you. Have a fantastic day, and we will see you tomorrow. If you need any assistance for whatever reason, if there's an issue with your coupon or you can't get PayPal to work or whatever the case may be, send an email. My team is here to help you, and we will make sure that we always leave the promotion open for you till that that discrepancy doesn't work for you, right? Take care, guys. Have a fantastic day, and we'll see you bright and early tomorrow. Hey, Andy, thanks, brother. Friday is about the transition between NeuroStreet's old programs into the new one. We went through a corporate merger, and yeah, there's things going on. So the Friday event will be important to be at. Yeah. Take care, guys. Have a fantastic day.